All right. Good evening, everyone. My name is Mark Maxim, and I'm the K-12 Director for School Counseling. And we have with us here our team of four counselors at the high school, Tanya Thibodeau, Giselle Carretero, Kirby Mosenthal, and Zohan Nadeem. So I want to thank them for being with us tonight. And then I want to introduce Dan Robinson. Dan is the campus director for financial aid for Pace University, Pleasantville campus. And he has been doing these presentations, financial aid presentations for us in the fall for many years now. And we really appreciate his expertise and sharing what's new with us. Even those of you who have a student who's in college, there have been changes to the way things work, and Dan walks us through all of that every year. So thank you very much for being here, and I'll turn it over to Dan. Dan, you're on mute right
Yeah.
now.
You would think 5+ years of using Zoom, I learned how to unmute myself. All right. Thanks again, everybody, for joining us this evening. Yeah, we know there's the World Series game, but I'll probably keep it just about an hour or so you shouldn't miss the first pitch. We have a lot to discuss tonight regarding the whole financial aid process. Some of you are obviously in the midst of the application process, getting everything done for your child's college career. I gather most of your parents of seniors, but for the parents of freshmen, juniors, sophomores, this information is useful, and you could carry it forward once your child is a senior. So here are the main topics we're going to discuss tonight. We're going to go over some of the common terms, what financial aid is, cost of attendance, student aid index, where the money comes from, the type of money is available. We'll talk about the FAFSA and some other forms. Difference between special and unusual circumstances, and throughout the presentation, you'll see a couple, bits of information that's new for 2026-27. So the first thing we like to talk about is the cost of attendance. It's a common term you hear of, what does it cost to go to a school? And you hear those big, scary numbers, some of them running up into the 80s, possibly $90,000 a year. But when they talk about those big numbers, it encompasses all of these items. But you really want to focus on the two that are highlighted, the tuition and fees and the housing and food. For us old timers, that used to be called room and board. With the school your child attends, that's what they're going to bill you for. So if they're living on campus, you'll have the charges for all of those. If your student's a commuter student, you'll have the tuition and fees and possibly a commuter meal plan or food plan as well. So that's really you want to focus on, not the big number, but the amount of you're being charged by the schools. The big number is used, for other purposes, as you'll see in a moment, to determine the need you have. But the other term that we to get everything started out is called the Student Aid Index. For the old timers that may have done a FAFSA years ago, this used to be called an expected family contribution. The Student Aid Index is a much more proper term to use because it's really just a benchmark figure determined by filing that FAFSA form. And what schools do, they use that number to determine how much financial need a student has. So they take the big scary cost of attendance number and subtract out the SAI, and that's the demonstrated financial need that schools will use to award your student different forms of aid. Some of the aid is need-based, and some of it's non-need based. And we're going to go over all the different parts of aid that are out there, the four main sections. I'm going to cover the first two and then skip a little bit before I get to the ones on the left. So I'm going to focus on the good stuff, the gift aid. So when we speak of scholarships, we're mainly talking about scholarships that are awarded at the time the student's admitted to the college or university. Usually, the admissions application also serves as a college scholarship application, but some schools may require additional information. Scholarships based primarily on academics are called merit-based scholarships. They look at obviously the high school GPA, and if some schools are no longer test optional, some still are test optional, and test scores. And they'll use that to determine what type of merit-based scholarship the student can receive. It's usually good for the full 4 years as long as they meet the mandatory grade point average and a couple other requirements about maintaining, enrollment status, etc. But usually that's good for the 4 years. You get a letter from the school saying, congratulations, you've been awarded a $160,000 scholarship. Basically, that's $40,000 a year for 4 years. So that's the main scholarship. Other scholarships that can be awarded are based on a student's talent that may not be part of the initial admissions application, but may have to come at a later date. Whether a student is an athlete, an artist, a musician, a part of the theater group, where they may need to have an audition, or if they're an artist, they may need to submit a portfolio that needs to be reviewed to determine, okay, in addition to being accepted to our school, now you're accepted to our program, and there could be an additional scholarship on top of your original merit scholarship. So it's something to look for in addition to the merit scholarship, and then there's the talent scholarship. Next, we're going to talk about grants. Grants is where more the need-based money comes into play. These are funds that are normally awarded after schools determine what your scholarship's going to be to see if they have any of their own money they could award you through a grant program. Grants also can come from other sources on the outside, whether it's state, federal, outside sources, etc., which I'll get to in a moment. But again, these two on the right is free money. It does not have to be paid back, and that's ideally what you're looking for to help fund your child's education. Now, the ones on the left, work study and student loans, I'm going to get to in the next section when I talk about where the money's coming from, with the first one being the federal government. So the federal government is the largest source of financial aid throughout the country. The awards they mainly have is the federal Pell Grant, then additional ones as well. It's based primarily on need. They do have one award that is not, and then they use the form called the FAFSA, which we're going to go over in good detail in a few moments. And each of the awards they have do have their own requirements. So these are the 6 awards from the federal government, with the Pell Grant being the largest. Uh, by filing the FAFSA is going to determine that's the student aid index number and also determine Pell Grant eligibility. Now, there's not a direct correlation to your SAI to the amount of Pell you're receiving, other than if you have the SAI of 0 or less, because you could have a negative number, which is kind of odd, then you're going to get the maximum Pell Grant, which is $7,395. And if the SAI is over $14,840, they definitely will not receive a Pell Grant. But anywhere in between, there's a possibility of getting the Pell Grant. The lower the SAI, the more likely the Pell Grant would be received. Now, the next one is the Supplemental Educational Opportunity Grant, commonly referred to as just simply as SEOG. Some schools say SEOG, but what this is, it's a pot of money that schools receive from the federal government each year to award to their Pell Grant recipients as they see fit. So it's not enough money to give to all Pell recipients. So each school sets their own criteria of how we're going to distribute the SEOG funds to our Pell recipients. Usually it involves how much need the student has. A lot of times, did they file their forms on time? Were they admitted to the college early? Because these funds do run out. Not all Pell recipients can get SEOG, but you cannot get SEOG unless you have Pell. So you won't see SEOG if there's no Pell Grant there. But each school sets their own criteria of who they award it to, as long as that student is a Pell recipient. Now, one of the more tricky ones on the federal side is the Teach Grant. This is an optional program for colleges and universities to partake in because although it's called a grant, it could convert to a loan. This is for future educators, so students who are going to be an education major in college. Once they declare their major, they may qualify for up to $4,000 in the Teach Grant. Now, if they decide later on, you know what, I don't want to be a teacher, I'm switching to a bio major, then whatever they got in that Teach Grant has to be repaid to the federal government in the form of a loan. Also, if they complete their education degree, they're obligated to teach in a designated teaching shortage area upon graduating for up to 5 years. So, a student may say, okay, I got great teaching opportunity in a district that pays really well, or teach in a certain district that doesn't pay as much, but not have to pay back the Teach Grant. So if they don't teach in that designated teaching shortage area, that Teach Grant would have to be repaid also. So for those reasons, a lot of schools are hesitant to participate in the program because they don't want additional loan burden on the students. So one of the ones I skipped over before is work study. Federal work study is considered financial aid because if the student is working on campus or certain off-campus job through the federal work study program, part of the money or most of the money they're being paid is from federal funds, similar to the SEOG. These schools receive an allotment of funds each year for federal work study purposes. So if a student's working on campus, making, say, minimum wage, 75% of what they earn is coming from government funds and only 25% from the school. So it's nice that the student's working, getting that, career experience. They're working around their academic schedule, meeting people on campus, and earning some money. Again, it's at least minimum wage. Some of the jobs, if there's talent involved, like a tutor or a lifeguard, may pay a little bit more. But it is considered aid because the government is funding that employment. Now, finally, the student loans. All first-year students are eligible to receive up to $5,500 in the federal direct loan program. If the student has financial need remaining after the gift aid is awarded, so after the scholarships, the grants, the Pell, state aid, if there's still need left over, up to 3,500 of that 5,500 can be what's called a subsidized loan, meaning while the student's in school and for a 6-month grace period after completing their education, that loan is interest free. So interest does not start accruing on that loan until 6 months after the student graduates. If they go directly on to grad school, it doesn't start accruing until they finish their graduate program. They have up to 10 years to pay this loan off. And again, nothing accrues until they start going into repayment. Now, for those students who don't have demonstrated need or for that extra 2,000 to get to that 5,500 figure, there's the unsubsidized loan. And what the unsubsidized loan has the same repayment terms. It doesn't have to be started to be repaid back until 6 months after the student graduates, but interest does start accruing right as the first disbursement happens. So the student starts classes a month later or so, they get that first loan, interest starts building. It's recommended that the student tries paying back any interest that's accruing while they're in school just to save some money in the long run. If not, they're not obligated to. It'll get added to upon going into repayment, all that back interest gets added to the principal balance of the loan, and they start paying it at that point. There is no penalty for prepaying any of the loans. So if you want to take the loans out and pay while the student's in school, that's perfectly fine. And then finally is the Federal Direct Plus program. Plus is a parent loan for undergraduate students. So for the parents here tonight, this is a loan you could take out on your child's behalf through the federal government. There's good and bad. It's a very simple loan application to complete. It's all done on the government website. They do a very simple credit check. They look at your recent credit history over the past 90 days. If there are no delinquencies, bankruptcies, charge-offs, you're going to get the loan. It doesn't look at your income. It doesn't look at your credit score. It doesn't look at your debt. It doesn't look to see if you're employed. It just looks at your recent credit history. So it's a very simple loan to get. On the other hand, the interest rate right now is just slightly under 9%, and the government takes a 4.25% origination fee right off the top. So for that part, it may not be the best for some families, but for those families who may not be able to find funding elsewhere, it is available to them. So two of the big changes this year. First for the Pell, which isn't as I guess, focused towards students coming directly out of high school. There's a portion of them that it is, where in the past, students who went for a job, didn't go to college, went for like a career learning center on a short-term basis for like 6 months or less. There was no funding for it through the Pell Grant program. Now there is. So this is one of those students who say, I'm not going to college. I'm going to go learn a trade, for the next 3 months, through an internship or whatever it might be. If they're in an eligible program, they could receive the Pell Grant. So that's the big change. The other one is what I spoke of before. If the SAI is over 14,800, students are not eligible for a Pell. There were some circumstances these last couple of years where the SAI was, 6 digits high, and students still got a Pell Grant somehow. So it was kind of weird. So they fixed that anomaly so that doesn't happen. The other big change is with the parent program. Now, if any parents are on here tonight that have taken out a parent loan in the past, you were able to borrow up to the full cost of attendance minus the aid the student received. Now, so we see student loans sometimes in the neighborhoods of $30,000, $40,000. That cannot happen going forward after July 1st. The maximum a parent could borrow is up to $20,000 per dependent student. So that's, it's based on the student, not the parent. So, we've gotten questions, well, what if one parent borrows 20,000? Can the other parent borrow 20,000? The answer is no. It's, so each student, the maximum the student can get is 20,000 from all their parents combined. The tricky part is, though, the new aggregate limit, there never was an aggregate limit in the past, is $65,000. Now, the math isn't working on that, and this is something that's still being negotiated to try to correct this, because if you borrow $20,000 a year for the first 3 years, that only leaves you eligibility for $5,000 in the fourth year. So it's a little out of whack, and we're trying to get that straightened out before we before the next school year starts, but we'll see what happens. It may have to start out like this, and then a change may come at a later time. For those parents who may have borrowed a loan in the past and your child's still in college, you have 3 more years under the old rules to still borrow up to the maximum. So that is there if you do need it. So don't stress over that if you have a child still in college. Uh, so that's the other big change. I'm going to skip the state aid right now because I have a whole section at the end regarding the whole New York State aid process. The next source of financial aid are the colleges themselves. So especially private colleges and universities. We know we have to compete with the state schools who are, significantly less expensive. So private colleges are more likely to offer the merit-based scholarships as well as need-based grants. Some schools also have their own self-help programs where they may have their own work study program that's not federally funded. So that might be a bit useful. All the schools require you to file the FAFSA form, and some schools may also require you to file something called the CHHS profile, which I'll touch on. And some schools even have their own form that needs to be completed. Now, I worked at a school over 20 years ago that had their own form as well. It was, not all that in depth, but asked a series of questions. So as you're going through the process, ask the schools what forms are required. And every school has deadlines. It's not necessarily a deadline to file, but it's more of a deadline to make sure your child receives the maximum aid. It's a priority deadline, not necessarily a deadline where you can't file after that point, just the priority date. Now, here's a little bit of homework that you're all going to have for both for the parents and if there's any students on board. Start looking to see if there's any funds on the outside that will help pay for college. Look in your community, look at the civic organizations, charitable churches, other religious organizations, local businesses. If you belong to any, yourself as a parent, were you in a sorority or fraternity? Do they have anything for your child? Is there anything in the town, like the Kiwanis Club, Knights of Columbus, to see if they have anything? Look around. Usually it'll require the student to complete an application or do a short essay. I always tell students, I addressed a bunch of students last week, I stress to them, when you fill these applications out or write these essays, have someone proofread them. Make sure you use proper punctuation, proper capitalization. I know having a child in college, I know how they write. It's a little different than, the way I grew up. So make sure you proofread everything. There are deadlines for all these applications. Most of them do not become available to students, though, however, until usually in January, February, once the new year starts. Also within the guidance office, they have scholarships applications available. So make sure your students keep an eye on their email that when that opens up for them, they know to apply for them as well. Just as an example, when my daughter graduated high school a few years ago, she applied for a lot of the scholarships. And one of the ones she got was a small one for $250 because she played CYO basketball when she was younger. So it was a little bit, we paid a lot more than $250 for her to play, but it's a little something that they were able to give back because she did participate in that program. So start looking at them now to see what's available. Be prepared to start the application process soon after the holidays. And finally, the employers. For those parents that are working, check with your benefits department, find out if there's anything that they have available in the form of scholarships or grants that for your child to attend college. Sometimes we see a lot of applications from the different local unions, union members whose child's attending. These scholarships may not be available in the first year. The student may need to prove themselves on the college level academically in order for them to qualify, but ask the question, find out if they're there. Now, if the student themselves is working and they're going to continue to work at the same place while they're in college, let's say they work at the local, say, ShopRite or CVS or Stu Leonard's, and they're going to stay local and continue to work, have them ask, do they have any college benefits? Letting them know that I'm not going away to college, I'm going to continue to work. Can you help pay for my college? We've heard stories in the past where there are awesome companies that do that, both large and small. So those are all the sources of aid. So now what I'm going to get into is the application process and where to find information. Anything regarding the federal student aid program is on a website called studentaid.gov. And one thing that all families could do, regardless of the grade level, is use the student aid estimator. You would put in information from your 2024 tax return. some other questions regarding assets, and it'll tell you what your estimated SAI is. Again, it's only as good as the information you put in. I use this regularly to do some estimates for a certain population of our students, and it usually is pretty close as long as they got the correct information. Now, for the students who are seniors and you're going to be filing the FAFSA, there's really no need to use the estimator because you're getting the actual number. But if there are any parents of juniors, sophomores, freshmen, take a look at this to give an idea of what's going to be coming for you in the next year. Now, I keep mentioning the word FAFSA. FAFSA stands for Free Application for Federal Student Aid. The key word here is free. You do not have to pay anyone to file this for you. The application has been simplified where it could be done in as little as 15 or 20 minutes. For those of you who might have filed the FAFSA 6, 7, 8 years ago, it was a lot more difficult. And sometimes people paid their accountant to do it for them. No need to do that. Literally, there's almost nothing to do, as you'll see in a moment. So it calculates this SAI, and it's available both in English and Spanish, and this is all on studentaid.gov. It opens up on October 1st every year, usually. Last couple of years was a different issue. This year it actually opened a few days early, but it is available now. So if you want to make sure you get it done as early as possible, I often get asked, can I do the FAFSA before my students accepted to a college? Yes. Have it done, have it ready to go. This way, you're not going to miss any of the deadlines that could be coming up. So before you get the FAFSA, the first thing you have to do is get what's called an FSA ID. Now, each student who's filing the FAFSA needs their own FSA ID, and each contributing parent that's going to be completing the FAFSA for the student needs their own FSA ID. For those parents in the room who have a child in college already, or if you were in college and did a FAFSA yourself, your FSA ID is good for all of your children. So you don't need a new one, but each child needs their own. Question I always get is, I have twins. Do both my children need it? Yes. Every child needs their own FSA ID. You have to put in your name, address, social security number, date of birth, all that information. And each ID needs a unique email address and cell phone number. You want to make sure that the student is not using their high school email address when creating this, because that email will eventually go away, and that'll cause them problems down the line when they try to log in, and that is no longer a valid email. So you want to make sure that they create one using a new email address. So now you're ready to file the FAFSA. So you get to the first page. This is kind of what you'll see, or the student will see. The student will log in with that FSA ID on studentaid.gov, and they'll click, start the 2026-27 FAFSA. You'll also see here, if you have to make an edit later on, you go to the same place and you could do that there. So it'll welcome the student. This is from their prototype, which is available out there as well. You click whether you're the student or the parent. If you're the parent can start the process, but it's not recommended. It's always recommended the student does their portion first. But I always tell families, carve out an hour's time. You won't need the full hour for the FAFSA. You said you only need about 15, 20 minutes, but carve out an hour's time, sit at a table with a computer or desk. Do not do it on a mobile device because the FAFSA is not friendly to mobile devices. Some functionality doesn't work. You want to make sure it gets done on a computer, laptop, even a tablet. But you want to do it together, the student and parent together. First thing it'll offer you is a series of 4 short videos regarding different information that's available on the FAFSA and what to expect. A lot of the information I'm providing you tonight are in these videos, but if you want to take a look at them, it doesn't hurt. I did a presentation last night for our incoming students, and demonstrated one of the videos. It's about an hour, so about a minute and a half, 2 minutes. So you can take a look at them, but you don't have to. Now, the reason the FAFSA is so simple, and there's a lot of convoluted words here, but this is the reason why the FAFSA is so simple and so fast. What happens is when you and your child are completing the FAFSA, you're going to consent to have all the tax information, the federal tax information, FTI, directly transferred from the IRS to the FAFSA. It's called the FADDX. That's the terminology, the legal terminology of it. So all the information that's needed for the FAFSA to be completed gets transferred over automatically. You don't see it. It just says it's successfully transferred, and that's it. That's why it's so quick. There's only one possible piece of information you might have to enter, and that's if you had a rollover on an IRA. So when the student logs in, it's going to list all their identity and contact information to make sure it's correct. The student will consent to have their federal tax information transferred from the IRS. Now, a lot of high school students have never filed a tax return, and that's fine. What will get transferred from the IRS is there's no federal tax return that matches this student's name and social security number. And that's fine, because one of the items on the FAFSA will come out as did not file taxes. No issue there. It's going to ask the student's marital status, which, I'd imagine for most of the students coming out of high school, that answer will be single. It's going to ask their college plans. They want to make sure they choose that they're a first-time college student. Sometimes we do see errors where students get, excited because they're graduating high school, they select graduate. You don't want to do that. You want to make sure they select first-time college student. And then it's going to ask a series of questions regarding some personal and possibly unusual circumstances. This is to determine the student's dependency status. For students started college in 2026, February, for fall 2026, if they're born before December 3rd, 2003, that'll be already known whether they're married, graduate, professional. If they can answer yes to any of these questions, they are considered independent of their parents. Now, some of them are pretty clear cut, graduate, military, etc. But if you're a parent or a guardian or a ward of the court, of a child who's a ward of the court, things get a little different. So if the child has been deemed a ward of the court, the parents are deceased, they're an orphan, they're in foster care, they do not need to provide parental information on the FAFSA. Again, there may not be parents in the picture. They'd answer yes to that question, and no parental information will be needed. They will need to provide information to the schools that they're applying to prove their status. Also, if the student's an emancipated minor or under legal guardianship, which is different from custody. So we've seen court-ordered custody. That is not the same. It has to be court-ordered legal guardianship. If that's the case, the student does not report any parental information. And if the school district determines that the student's at risk of being homeless or has been homeless, that's another reason to be considered independent. Now, if you are a legal guardian or have custody of a child, your information as a parent is not required, or as an acting parent is not required. Now, an unusual circumstance is if the student can't answer yes to those previous questions, but there is a situation where they no longer live with their parents because it's a risk to the student. There's, either domestic violence or an abusive relationship, and the student has court documents or police reports where it's unsafe. Now they're living with friends or they're living with a family member. It's not one of those, can't answer one of those questions. The student can be considered provisionally independent. Now, of course, we'd have to collect the documents to prove that to what we do, what's called a dependency override to make them independent, not provisionally independent, but just straight out independent. So again, if the student's in that situation, that's going to need to have those documents available to submit to the schools so the schools can determine that, yes, you are independent based on your living situation, and they'll move forward without requesting any parental information. So other information is going to ask about their student, just the name, the address, all that. Whether or not the student's a U.S. citizen, the FAFSA can be completed by anyone who is a U.S. citizen, or if they're an eligible non-citizen, meaning they have an alien registration number, that would need to be provided from their green card. It's going to collect some statistical information regarding the parents' education status. They're trying to determine how many first-generation college students are going each year. So it's a simple question. Did your parents graduate college, high school? Do they have a high school diploma, graduate college, master's degree? Or one of the answers is don't know, which is fine. They can answer don't know. Now, the one piece of aid that doesn't require a need from the federal government is if the student lost a parent in the line of duty, military duty, post 9/11, or up to the current times in a military action. If that's the case, the student will qualify for a full Pell Grant regardless of their SAI or regardless of the surviving parent's income. So it's one of the things the government put into place many years ago to say, you know what, the parent, served their country, they lost their life. The least we could do is give the student a Pell Grant. So that's the one that doesn't have any need requirement. And next is the high school information. The student will put in the state of the high school, the town, and high school will be listed for them to check off the correct one. Just be careful though, because you are in an area that has other high schools in neighboring towns. So you want to make sure that the student does choose Croton Harmon and not say Peekskill or Hen Hud, because which might pop up when you put in the area. I said, students' tax information will all get carried over if they filed. If not, then don't worry about it. It's going to ask the student a series of questions regarding their assets. If it doesn't pertain to them, they put in the number 0 for that. They cannot leave it blank. And I'll talk about assets when I get to the parent section, what is considered an asset. It's also going to ask whether or not the student had any foreign income tax exclusions. Again, just put in the zeros. Now the fun part for the student. They get to select how many colleges or what colleges are going to receive the FAFSA data. So it starts the same way. You put in the state and the city. The college names usually pop up. You can try typing the college name. My word of advice is to be careful when you're choosing a lot of the SUNY schools, because they have possibly different colleges in the same area. So if you put in, New York State, Buffalo, and you see SUNY, it could be SUNY Buffalo, there's Buffalo State, there's Canisius College, there's all different ones in the Buffalo area. But the SUNY sometimes have similar names, in Albany as well. Last time I did this with the family, they accidentally selected SUNY College of Pharmacy instead of SUNY Albany, because it's in SUNY Albany College of Pharmacy instead of just SUNY Albany. So just be careful with that with the college selection. Students can list up to 20 colleges on the FAFSA. Now, if they have more than 20, the student has to go get the FAFSA fully processed, then go back in, make an edit, take some off, and put some on. Also, if they have more than 20, you owe this wonderful guidance staff a thank you, because they have to go through all those applications in order for the schools to receive them. So you owe them a big thank you, and possibly a nice little gift. Student will then get to review all the information and then sign it and invite their parent to complete the FAFSA. So the parent invitation, all the student has to provide is an email address, preferably the one you used on your FSA ID when you created as a parent. Prior years, they had to enter the parent's date of birth and social security number. That's not needed anymore. Just a simple email address. They put that in. Once they've signed the FAFSA, the student does their signature. The parent will get an email to accept an invitation with a code on there. When you get that, you log into studentaid.gov with your FSA ID and you put in the code, and now it's your turn to complete your portion of your child's FAFSA. Same basic information: identity, consent, marital status. Now, for parents, the option for marital status is the same for students too, is whether you're currently married, both parents married, living together, unmarried, living together, separated, divorced, widowed. I think there's one I'm missing. I think those are the ones. So if you get to choose a situation, this will determine who is going to be the contributor on the FAFSA between this and your tax return. So if it's a status where it's both parents are married and living together, or the parents are unmarried living together, excuse me, let me back up a little bit. If the parents are married living together and they file taxes jointly, one parent is the contributor. If they're unmarried living together and they're filing separate tax returns, both parents have to be a contributor on the taxes, on the FAFSA. If the parents are separated, it's the parent that provides more financial support for that child is the contributor. And if that parent is remarried, their spouse's information is needed also. So that could be the third one as well. But again, if the parents are separated, the other parent that the student is not the contributor does not need any information. So this is some of the financial information, whether or not the parent received any federal funds for means tested benefits. It's just in the past 2 years, have you received it? It's a yes or no question. Well, actually, it's not even a yes or no. You would check the box. If not, you would select at the end, none of the above, and then you'd move on. Now, the tax filing status is the other part to determining who is the contributor. Like I said, if you file taxes married filing jointly, then one parent is the contributor. If it's married filing separate, or head of household, or single, then it's possibility two parents may need to complete the FAFSA depending on your living situation. As I mentioned before, all tax information is carried over with the exception of possibility of entering information about a rollover. So although you don't need your tax return to file the FAFSA, take a look at it. Or if you know you took out a withdrawal from a pension or an IRA in 2024, whether or not it was taxed or not gets carried over. But if it was untaxed, but you rolled it over into another retirement type fund, you have to put that information in. That does not get picked up in the transfer, unfortunately. It'll give you the option saying you have a rollover, or do you have a rollover? If you click yes, put the amount in there. If you forget to do this, you cannot go back and make this correction. That correction would have to be made by someone in a financial aid office. So it's one of those things that everything will go process through. You'll get a much higher SAI than you would normally have, and then you'd have to contact a financial aid office to make that correction on your behalf. So next, it's going to ask some questions about your assets. The first one being, what cash do you have on hand in as far as cash, savings, and checking? What's in there as of the day you filed the FAFSA? Now, I like to say it's not necessarily the day you file the FAFSA, but more so what's normally in there at the end of each month after you pay all your bills. So as an example, I'm going to get paid on Friday, so my checking account is going to look pretty nice. On Monday, my mortgage payment's coming out. My checking account's not going to look very nice anymore. So what's normally in there at the end of the month after you pay your bills? Lowest number you could report is zero. Just so you know, zeros are acceptable. Other assets that have to be reported is if you own a business with more than 100 employees, if you own real estate other than the home you live in. So if you have an investment property, you own an apartment building, you have a house, you know, down in Florida or up in the country, that's not your primary living residence. It's the value of that home minus any debt you have on it. Any traditional investments, stocks, bonds, certificates of deposit. You would also here report as a parent the value of any 529 plan for the student that's attending college, that's filling out the FAFSA. So if you have three children with three separate 529s, you only report the value of the one that's filling out the FAFSA, not all three combined, just the one. Now, if that 529 is held by either yourself or the student, it still gets reported as an asset for the parent, not the student. If the 529 is held by someone outside of your household, grandparent, aunt, uncle, whatever it might be, then it's not reported at all. So that's the benefit of having the 529 held outside of the family. But again, if you do have a 529, it's considered an asset for the parent only. Now, just to stress, things that are not assets. So make sure you don't, this is where we see a lot of mistakes. Again, the value of the home you live in, you do not report that as an asset on the FAFSA. If you have a business with less than 100 employees, that doesn't get reported. Now, the other big one is the value of life insurance policies and the amount of money in your retirement funds. That is not part of the FAFSA calculations. You do not report them. So if you have the 401k, 457, 403b, whatever it might be, Roth IRAs, that's your retirement funds. That's not that's not supposed to be used towards your child's education. So it does not get reported. A lot of times that's where we see a lot of mistakes that families make, that they report information that they shouldn't, and that hurts their students' chances of getting aid. Then if there's additional parent information where a second parent has to complete the FAFSA, you put their information here so they can get that invitation when you complete your section. Other thing you can change that's different from that carries over from the IRS is the number in your family size. So the FAFSA will calculate the number of exemptions on the tax return as your family size. Now that could be different. You may have someone in your household that you care for, that you take care of, that files taxes on their own. You don't claim them, but you're still supporting them. So whether it's a child that's back from college that they're filing taxes, but they're still living at home, whether you have a parent of your own or a sibling of your own that you're taking care of, if they live in that household and you're going to be providing at least half their support, you could change the size of the household. Otherwise, it'll just automatically go to the number of exemptions. What you would do is it says, do you want to change the number? I would say click yes, and you'll see what's listed. It'll say the student one, parent two, and others. It'll say whatever it might be for the total number, and it'll allow you to change it if necessary. Don't change it down, you can only change it up. So now you're done with your FAFSA. You'll get the balloons flying away. Congratulations. You could review your information. You check the box that you say, with your names certifying that you are who you say you are, and the FAFSA is done. Again, 15, 20 minutes for, the student does their part, probably about 5 or 6 minutes. Parents may take 10 minutes, if that. So it's a really quick process. Now, the student can then go to their the dashboard on studentaid.gov and see all the information they have. So they click those little buttons at the bottom to see the eligibility overview, the answers to their questions, the schools that they listed. This is where school students might say, wait, did I leave a school off? They go there, they'll take a look. If they did, they know they have to go back and edit it. Once the FAFSA is processed, they could add the school, and it'll give them some hints on next steps. They could print all this information out, and it's there on their dashboard. You don't have to. If you want to save it to your computer, you could do that as well. Now, the FAFSA doesn't take into account special circumstances or things that go on in life that, can't be explained on a simple form. So if you have a unique condition it doesn't show up on your tax return or, through your assets or whatever it might be, you can submit a letter to the schools explaining your situation, saying, since I filed my 2024 tax return, things have changed, and explain the change. Do not send documentation right away, because some schools will say, okay, we can move forward with this information. Other schools can say, we're going to process your aid based on your FAFSA. We cannot move forward with the information. And that's within their right. So one school could say yes, one school can say no. Now, the common special circumstances that we see, of course, there could be other things that aren't here as well. The one that all schools will be helpful with is, of course, if a parent or a spouse passes away, that's an automatic. Usually loss of employment as well is something most schools will work with you on. As long as it's involuntary loss of employment, if it's someone voluntarily retires from their job, that's something a lot of schools will not look at as a special circumstance. If it's a forced retirement, that's a different story. If the income is reduced because you change jobs, that's a very 50-50. Some schools will say, okay, you know what, that'll reflect in a future year's FAFSA. But for this year, we're going off what was on your 2024. And that's within their right to do that. But if they pursue the professional judgment or special circumstance review, they're going to ask for a lot of documentation. And schools ask for different types of documentation. With any of these, the reason we need so much documentation is we're changing a federal document. The FAFSA is a federal document. So if we get audited by the federal government, we need to have all our ducks in a row. We don't want them, to come up short saying, "Oh yeah, the parents said they lost their job, so I zeroed out their income." That's not sufficient. We need to see proof of it. So any of these items that come into play, if you have medical expenses, and these are medical expenses paid out of pocket after insurance, we have tried parents submitting explanation of benefits to show their medical costs. That doesn't show everything. That doesn't prove that you actually paid what's on the explanation of benefits says to pay. So we need that documentation. If you have dependent care for, possibly a special needs child, or if you're paying for your parents to be in an assisted living facility, some schools will take that into account. If you have a child not in public schools that you're paying a tuition for, again, that's a lots of 50-50. Some schools will do it. Some schools will say that's your choice. You don't have to do that. Additional family members in college, that's kind of new because although the FAFSA asked the question, it's not part of the calculation any longer. I was at a conference a couple of weeks ago. About a quarter of the schools actually will make an adjustment for additional family members. Most of them still are not doing that. And finally, divorce or separation. If if things have changed in marital status since you filed the 2024 tax return, then we may be able to split the income and process the FAFSA based on one parent as opposed to two. But again, documentation, documentation, documentation. And when we're done with that, we're going to ask for more documentation. So just be prepared if you have one of these special circumstances. I'm going to take a quick break and check the chat to see if there's any questions.
I've had a couple questions come in, Dan, if I
Sure.
can share with you. First question was, if there are strategies that parents can take to lower the SAI, such as how they arrange their retirement funds or, things like that.
Not really. I know on social media there are a lot of advertisements for things like that. We'll reduce all information. I sat through one of those programs, the hour program. The first 30 minutes or so, they talked about different things. A lot of what we spoke about, the common errors, not reporting, retirement funds, not reporting house, all that. The other half was selling their product and paying them $750 to get you more money. So take for that for what it's worth. But
Mhm.
uh, really at this point in time, being you're filing the FAFSA now, there's really nothing you could do for students who may not be seniors this year. If you have money you could put into a retirement fund as opposed to being in a standard checking or savings account, that could be feasible. But again, I'm not a tax expert, so I don't want to give you financial advice that could hurt you in other ways. So just remember that retirement funds are not reported. Cash savings checking is reported. Standard investments are as well. And I'm not gonna say cash out a CD and now you have tax ramifications just to put it in your retirement fund. Don't want to do that. Check if you have an accountant, a financial planner, speak to them about, moving money in any sort of way. But the key is the tax date is going to transfer over. So, it's going to be what it is. And then it's really just the assets that could be adjusted based on your status as the time you file in the FAFSA.
Yeah. Gonna my understanding here is anything that lowers the family's taxable income is going to affect SAI, but that's part of such a much larger financial picture. You wouldn't necessarily do that just for the sake of lowering SAI.
Correct, exactly. And the FAFSA does, there is the statement on there that all the information is true and honest, to be fined up to $20,000 and 6 months in jail. We have seen some of those investigations over the years, so it does happen. But again, um, part of the reason with the that DDX, that consent, that does stop a lot of, some fraudulent FAFSAs that have happened over the years as well.
So another question came in. Should you add a school to the FAFSA that you might not end up applying to?
It doesn't hurt if a school gets a FAFSA that they don't have an admissions application to match it up to. It sits in a file somewhere, an electronic file, not a paper file, an electronic file until there's a record to match it to. So, if you're like, you know what, I really want to apply to Notre Dame, I'm not sure, but you know what, when you fill out the FAFSA, throw Notre Dame on. It doesn't cost you anything to do it. They'll get the FAFSA. If you never apply there, it'll just sit in their file, and then you don't attend, that file gets deleted.
Right. And the last one I have here is how is an UTMA account treated? Is that the
Uh,
same as 529?
Good question. I should have covered that. So if there's a UGMA, which is Uniform Gift to Minors or a Uniform Transfer of Minors, for which the student is the actual owner of it, it gets reported as an asset for the student. If the student, it's a custodial account for the student, not in the student's name, it does not get reported at all. So most of those that we've seen over the years, they're usually custodial type accounts where the student, the parent controls it, the grandparent controls it, but it's for the student. In that case, it is not reported as an asset. Again, it's, you know, doing the right thing for the student to, help pay for college. So they don't want to penalize you too much on it.
Mhm. And that was something I heard you say earlier that I thought I know to be key. Who owns the 529 account matters. If you can get it outside of the immediate family, if it's owned by a grandparent, that is a good thing in terms of the
Yes,
SAI.
definitely. Or an aunt or an uncle, whoever it might be.
Right.
And remember,
Yeah.
just so quickly, 529s can be transferred to first cousins. And I was lucky, my daughter enough, my niece graduated college a couple of years ago. My sister-in-law still had a few bucks left in the 529. So I paid a little bit of my daughter's tuition this year. It was nice.
Nice. Okay. That's the end of the questions I have here.
Okay. So a couple more slides. I'm going to go over the New York State eligibility and the CSS profile. So being we're in a high school within New York State, there's a good chance that everyone here is a resident in New York State, hopefully for at least 1 year. So, in order to qualify for aid for the state aid programs, that is the requirement. The student and parent must be a 1 year resident of New York State at minimum, and attend and matriculate at an eligible college within the state. Now, there's mainly four main programs that New York State offers. The first one being TAP, the tuition assistance program. This has been around forever. I like to say forever because I got this when I went to college, however many decades ago that might have been. Um, Only the requirements are that the student must file a FAFSA and be an undergraduate student at a school in New York State. Now, this one has an actual, I'd say a magic number tied to it for the New York State aid programs. If the family income is less than $125,000 in New York State net taxable income, students can qualify for state aid for their need-based programs. Now, for the TAP program, the maximum award, yes, you see there's the 5665. The minimum is 1,000. What we've been seeing over the last couple of years, anyone who has a New York State income of about 70 to 75,000 or higher, up to the 125, they're going to get the $1,000 award from TAP from New York State in the TAP award. Anything under 70 is when it starts increasing. It's just what I've been noticing. Again, there's some things change. Some people get a little more here or there, but that's usually how it works out. If your student decides that they don't want to go to school full time right away, they say, you know what, I'm not sure if college is for me. I'm just going to take, 2 or 3 classes at WCC. Perfectly fine. They could still apply for TAP as long as they meet the income requirements. Now, the next 3 scholarship programs are all have common factors as far as requirements other than financial in play. But go over them quickly. The Excelsior Scholarship is the one that came about a few years ago and uses that same $125,000 income threshold. So if the family's under that, a student can attend a SUNY or CUNY school tuition free. So students will still be responsible for fees, housing, meals, etc., but the tuition would be free at those schools. I'll go over all the requirements in a moment because all these have similar requirements. Now, for private colleges and universities in New York, they can opt into a program called the Enhanced Tuition Award, or ETA. Not many do. It's a tuition matching program where the maximum award from the state is $6,000 in state aid. So schools that opted in the past, the students saw receiving this award were getting minimal funds from the state because when you factor in the TAP award also, it reduces the ETA. And the amount of administrative work to run the program was overbearing, to say the least. Schools decided, you know what, we can give our own grant money in place of an ETA, and it's a lot easier to manage. As an example of this as well, I was at the conference a couple of weeks ago. New York State was saying they're finally getting around to balancing the books from the 2021-22 aid year on ETA. So some schools still haven't received funding from 3 years ago for the program. So that's why a lot of schools decided, you know what, this isn't for us. But if your child is looking to attend a private college in New York State, ask if they do participate, and there's a separate application that would need to be completed. And finally, the New York STEM incentive. This has no financial component. This is strictly academic. If a student's looking to be one of a STEM major, science, technology, engineering, mathematics, in a CUNY or SUNY school, they'll get the full tuition scholarship. Again, just tuition. They have to be determined to be in the top 10% of the class. I'm not sure if you do rankings there. If not, they have a system built in to determine if the student would meet that criteria. Now, with all of these programs, there's an academic requirement of completing a minimum of 30 credits per academic year. So it's roughly 15 credits per semester. Students can use the summer or like a January intercession type term to make up any credits they need to get to that 30 mark. They also, on the back end, have to live and work in New York State for the same number of years that they receive the scholarship upon graduating. So if your child's lucky enough to get the award for the full 4 years, once they graduate, the job they get has to be located in New York and they have to remain living in New York. Otherwise, it gets paid back to New York State in the form of an interest-free loan. So sometimes that may mean that your student's going to come back home to live with you for another 4 years after college so they don't have to pay off their Excelsior scholarship. But again, small price to pay to get a free tuition. Now, the STEM award also has another academic component of meeting a minimum grade point average of a 3.0. Now, with the state aid programs, including TAP and these, there's an initial state aid application that needs to be completed. And this is only the student does the completion of it, but it needs a lot of parental tax information. So you will need to have your 2024 New York State tax return on hand. It'll take you a little bit longer than the FAFSA award, so you want to make sure you get that done as well. It'll probably take you a good, maybe 20 minutes to a half hour to do it. So ask for more detailed information from the New York State tax information. So you want to make sure that gets done as well. New York State also has some other awards not listed here that are less common. Probably the most common of the lesser common ones is the New York State World Trade Center Award, where if the student's parent was either disabled or killed in for the World Trade Center attacks, they cover up to a full SUNY tuition at any college in New York State, and there's no back end requirements on that one. Where even if this child attends a private college, that private college will receive money from the state, the equivalency of a SUNY tuition. So that's one of the benefits they do offer. If you visit the New York State website, hesc.ny.gov, they list all the other scholarships that are there as well. But these are the main ones that we've seen over the years. And I haven't seen the Excelsior because I'm not private school, but these are the main ones that are available. Now, the final slide I'm going to touch base on tonight is the CSS profile. I always throw my disclaimer out there that I've never worked at a school in my 30 plus years of doing this. I've never worked at a school that required the profile, and my daughter never applied to a school that required the profile, so I lucked out. It is an additional form. It has a fee involved of $25 for the initial application. If it has to get sent to multiple schools, it's $10 per school. There are fee waivers built in through the free lunch program. So check with the College Board. They determine all that for you. It is done on the College Board website. It's used by more of the highly selective colleges that are spending a lot of their own private and donated money to students. So if they look for more detailed information, this form will take you probably a good 45 minutes to complete because it looks at more of your asset information. It looks at the value of your home, the cars you drive. If you're separated, it'll look at the other parent's information, the one who's not necessarily the contributor on the FAFSA. It'll look at both biological or adoptive parents' information, and if there's step parents involved. It takes a bigger financial picture. It also looks at debt and everything else. But again, these are the schools that are spending a lot of their own money on their students. They want to get a bigger picture of things. It is open. It opened up on October 1st. You want to go to the College Board website to make sure to see which schools require it. They do have strict deadlines as well. In the past, I've heard of some of the deadlines as early as November 1st. So I'd say, if you can this evening, look to see if any of the schools your child's applying to, if they require the profile, and if there is, what the deadline date is for your school. So that's something that really is important for you to do. That's all the forms. I don't have a slide for this, but just quick, what's coming next? Your child's admitted to the college. They got all their forms in. Now it's time to make the decision. How do you, see what schools what? My recommendation is just start a simple spreadsheet, list the name of the college, list their direct costs, the tuition, the fees, the housing, and the food. When you get the financial aid award notices from the schools that break down, all the gift aid versus the loans and work study, just look at the gift aid portion, put that in the next column, and let the spreadsheet do the math. So, it's 50,000 to attend. My child has $34,000 in gift aid. It's going to cost me $16,000. And just use that as a comparison. I always tell families, for some families, it is the bottom line is what decides where the child's going to go to college. But you also want to make sure the fit is right. That they're going someplace that they're going to get the education they want, and it's going to, put the less burden on you after college. While they're in college, it'll be a burden, but after college, you don't want that burden on top of you as well. But yeah, just set up that spreadsheet to help make the decision. It'll be a lot easier, to look at one piece of paper instead of shuffling about. So as soon as the student starts getting those award notices, fill all the details in. The award notices may go to the student's email account. So, having a high school senior look at email, we know is difficult. But all the information is going to go there, that they have set up. For those parents who might not have set up, might not have started the process yet, I'd highly recommend creating a new email address just for the college process that both you and the student have access to. This way, you could check it, they could check it to make sure you're not missing anything. Again, if there's any families of, high school juniors and whatnot here, that'd be the best bit of advice I can give you on that. So that is a lot of information in just under first pitch uh, of the World Series. So if you have questions, submit them in chat. If you have specific questions about your student at a specific college, reach out to their financial aid office because each school does things a little differently. The forms are the same, but their processes could differ slightly from college to college.
So Dan, I've got two questions that have come in here. First is, are all of the New York State aid programs capped at 125,000?
Everything but well, the TAP, the Excelsior, and the ETAR. The the STEM one is academic, and the World Trade Center is that's based on the just on whether or not the parent was disabled or died in World Trade Center.
Okay. And the other one was, how does FAFSA work or apply for international universities such as a school in Canada?
If the school does not have a U.S. affiliation, then a FAFSA probably would not be needed, unless I don't think the international schools are listed on the FAFSA. Some might be, again, for they might be able to use FAFSA data. But I would check with that school to find out what forms need to be completed. They may require more of the profile than the FAFSA, because the FAFSA is for U.S. federal aid. That's what it's based on. Unless those foreign schools are affiliated with a U.S. college or university, they probably cannot have access to the information since, again, they're not, a U.S. based school. So that's it. Those will probably either use their own forms. There could be like a Canadian form to complete. I have seen Canadian loan applications and Canadian aid applications because we've had students from Canada coming to us where they need information in the reverse. But those schools would be more likely, if any form, to use the profile over the FAFSA.
That's all the questions that I have here.
All right. So thank you everyone for coming out tonight. Again, a lot of information. Hopefully everything goes smoothly for your child. Again, the FAFSA is going to be the easy part. Just the stress of getting to May 1st. It's fun. It's stressful. As a parent, I can tell you that, but hopefully everything works out great for your child. Thanks for joining us this evening.
And thank you, Dan, for being here with us. Everybody, have a great night and best of luck in the college process.